Hello friends, welcome back. This is a early weekly review because we do this on Fridays, so we cover the entire week. So let's cover 4 days and see what is going on. Going back to level 1, part 2. Once you know where the 4 hour, 1 hour target reflection points are, we keep that in mind. Either we use those strategies in level 1, part 1 to enter the trade from the reflected banking reflection levels, or we use something still from the levels, because here's the story. You have a level here and you have a level here, as we have been showing you the market maker levels, right? So you have a level here, you level here. They will go there, but they will not just go straight. They will do all the games. They'll play all the games, and they'll go there. And then they try to take some people out of the game. And then they will play the game, show that they're going to break, but they will do this. Right? Okay, so we understand this game if you are in the game for a while. So idea is not to get gamed, but to play the game they play. That's the whole game. So there are games inside games and players inside players. They call them other time frame players. These are the hidden players. Dark pools, right? They show up there. Big algos show up there. But dark pool prints can be outdated by 24 hours by law. FINRA says you have to report your dark pool activities within 24 hours. So what banks do? They trade across the pond, right? In the pond, this side is Europe, this side is USA. They trade on each side. I trade here, or I don't have to report within 24 hours. So you are looking at the prints which are already delayed by 4 to 24 hours. They are not legally obligated the moment they make a $10 billion trade to tell you right there. So all the companies who find after hour prints and before morning prints, they are delayed prints. Watch that word closely. But that doesn't mean it's not a referenceable level. It is referenceable level, but the business is already conducted, right? So dark pool is just that. It's a big volume area, but business is done. That's why we say above this, but we cannot say the dark pool is on the buy side or the sell side. We can always say big volume took place here. Above this, below this is short and long, because we don't know the dark pool activity is on the buy side or the sell side. We just get an idea, right? That's why now if you are hitting the bid, so bids are here, asks are here. If somebody is hitting the bid aggressively, hitting the bid, that means this is a seller active in the market. He's hitting the bid, right? In the two ladder, he's hitting the bid. He doesn't want to get a big buy low, sell high. He doesn't care. He wants to just sell. He's selling low, not selling high. He's showing aggression. That is hitting the bid, leading the bid. That is aggression sales, right? Now we have order flows. Order flows are for the options. And order flows in the options nowadays are even expressing themselves in the stock market, because these flows are becoming so big. And because of the hedging which has to take place, if I am a long call, this is you got the idea, right? This is a zero risk point, right? If I'm a long call, and you can always assume If public is mostly long calls and long puts, right? If somebody is long call, who is selling? Market makers are right here like this. They have infinite risk by selling puts, right? And they have infinite risk by selling calls. They are on the sell side. And this is why they make the market, and they hedge it later on, right? But they don't hedge every tick. They have to hedge at a very critical levels. So these blue lines, what you see, which we are posting for 1 year now, those are the critical hedging levels, right? Now this is on a daily. Now the hedging levels are at different time frames also. We are doing it on a daily level, where the hedging flows are coming, which we see, where the values is, where the hedges will initiate. That's why we say this can happen this way or that way. And you can build some other extra evidence on top of it to take a bias. That comes technical, tactical trading. But they go from levels to levels. And they can go down into the multi-time frame players. People don't even look at dailies, big players. They have multi-year objectives. They have yearly goal. They have there's a money lines which are like 2% a month, 1% a month. Unless you break those money lines, it's all noise for them. For you, this is multi-weeks, multi-days, multi-weeks, right? Or you can have this aggressive line. Somebody wants 3% a month, right? So how to place these money lines, what to do, we can't express all this in public. But understand this, right? At the day trading level, blue lines we are posting. We are posting the frequency. We told you what to do with the frequencies, right? And we've shown you at least 7-8 times precisely hits it, reverses it, right? So, okay, but you're a day trader. You show up for work every day, market opens and you want to take a trade. Or so it's about location, first thing. Either you get to the right location, right? Market is going to retest these locations and take the trades. And one market is going from 4 hours to the next 4 hours. These areas will create the trends in the middle. But trend is not like this, 4 hour here, 4 hour there. It is manipulation going on, contract collection going on. They'll jump from all the blue lines to blue lines to blue lines to blue lines, and as you've seen it many times. So, level 1 teaches that approach. Where is the trade location? And these locations, these laws are used by the big, huge institutions. That's why they work. And they're not in public for a reason, right? All right. And there's nothing complicated about it either. They use laws, natural laws. They use similar tools, but they use it differently. They use moving average by doing a trend line and retest failures with the sloping structures, especially in forex markets, right? They do same things you do, but differently. And they do other things complicated, but there's some value added in every structure. They know where the values are. They know what the composite values are. Everybody is looking at those value. Are we in balance? Out of balance? And there are rules. So, having said all this, once you know you're reaching a target, the trend, according to any other thing you see, will be delayed, right? So that's why we have this predictive modeling, which tells you where potentially things will happen. And once you get there, what to do. Anything in the middle are just pullbacks towards one target, big target to second big target. Well, these are the targets where they will hedge. Either they will not let it break because their risk goes up. There means market makers, banks, market maker banks, right? Investment groups, their risk goes up, especially in the option market. They have to hedge because they're on the sell side. You're on the buy side. I'm not talking about future. I'm talking about the underlying rhythm of the market. It is driven by the option flows. It is driven by the dark pool activities on the stocks. But they are delayed prints. They get published later on. They are not real-time prints. By law of FINRA, 24 hours are given for them to show their hand. And they do everything, even with this context. Now, if they tell you have to do real time, every time they do dark pool activity, they have to reveal within a second to everybody. Then why they has to be dark pool? So FINRA law clearly mentions within 24 hours they have to do, and they have big levels, very critical levels, could be delayed by, so you can see they are delayed by 4 hours, somebody delayed by 8 hours, somebody delayed by up to 24 hours legally they have to report it. Just like if you are a insider, if you're a CEO of a company, a CIO of a company, they have to file forms 4B, right? And the internal directors, when they buy and sell their own stocks, they have 3 days to report the activity. If Jeff Bezos buys and sells billion-dollar things, they don't need to report in a second. They have 3 days, right? So days can change, hours can change, but they're pretty close, right? So I'm not tracking the latest laws, but I'm just telling you. So all this activity you see in the prints, assume they're not real time. That's why you need to know the methodology for the forecasting and the levels. All right, so let's assume that is all done, right? You know what is going on and what you will do. Now comes that's the planning phase, tactical phase, and even that phase itself gives you what we call as banking bar entry also, a multi-time frame. And that's it. That level 1, part 1 itself is complete. Now people who want to do aggressive day trading, you go to level 1, part 2. Here, 22 days trading, statistics of this data, historical data. Everybody can hand test. Everybody can hand test as well. You should win 18 days. And if you lose a day, on a given day, you can attempt to take the second trade. These lines are separated by 9 points, blue to blue or red to red. And they are respected beautifully. And they jump from these lines, these lines, these lines, these lines. 9, 18, 36 points. Your job is to catch at least this stop loss initially is here, 1 to 2, 1 to 3, with runners. As I said, one contract per month on ES should get you to 10K a month average. If you get aggressive, you should be able to win 18 out of 22 days with the trade management strategies. All right, so that is all the base ground. Now, let's see this week's trades. We're doing early. Now, for folks who are having trouble with the trend, and we're going from level to level, right? Well, let's say you don't even want to do that, which is fine. Now you have something called contract locations. Contracts are at the bottom. They're going to hit to, this is a reflection point. This zone got there, came down, right? Now the problem is you guys are looking at very small stop losses and whatnot, but either way, this other approach is when the close is above all these lines, trend has shifted, okay? So with that approach, you may have other approaches to find the trend or the direction, but this level moving from one location to another location. And while you're moving there, you're zigzagging in the middle. Okay. Good trades, you can start coming to work at 6 o'clock, and you'll find some good trades. That's the whole thing. And early morning, so that's the way it is, right? So we are gonna head, now we are heading towards the top side. Trend line based trend will change later. They are lagging indicator. Right? So we had a level here to go long. So we have an opportunity to go long. We have this balance imbalance come together, right? And it is going to just, it can slide, slide, but you know, we want buy entry has to take place. That means limiting orders. This is the fourth time we're reviewing this. So if my bias is to the long side, it can go down. Let it go down. Let it go down. Because we may be wrong. Because everything is lining up. Contracts long, long. Okay, long. Other approach is to go long. So many ways to find long. But we have a predictive model which tells you from this location, you have reached the 4-hour terminal points. Change is expected. Then how we enter it is, this is one way of entering. All right. Early morning also you can do, just 15 minutes also you can do and say, hey, I'm not looking to look at the trend. I'm just come in the morning and just take trades, which is fine. But then you expect you may get chopped off too. Then you have to get into the not getting scared mode. And now contracts are going on the sell side. They are just accumulating. And they're ready to blast. Balance, imbalance. Comes down. What do you do? Put a buy order and let it jump same color line. Right there. 9 points, 9 points, 9 points. The day is done. It could be done by 9 points. As you build your account size, 10 lots, you're done. $4,500, you're done. Now, if you get stopped out, then only you take the second trade. You cannot get out, go home, crying like a baby. On the right side is a 5-minute chart where the algos are tracked. And okay, so where we are, let's go back to this. And let's do a 4-day review. Okay, so here are we are here. Yeah, okay. Okay, there we go. Now this oscillator on the 5 minutes is very strong oscillator. It has 10 different instruments inside one, 10 in one. It has 10 different non-correlated instruments in one. Now this is 5 minute, early morning, is chopping, chopping, chopping. This is fine. The bias is long. So what we can do, there are methods we have shown, but at least for this guy, you can just draw right here, top to the box. Let it go like this. One close above this, boxes are there, right? So boxes are there, boxes are there. So this small box, because our bias is going from this point onwards, from this 15-minute going to 5 minutes at the same time frame, 8 o'clock onwards, right, is long. Stop loss is below the pivot. And you never look back. If you caught this trade nicely at the close, one tick above this, stop loss is below the pivot, you never looked back. In fact, they are adding. Now look closely what's going on. Look closely what's going on. Look at this. This algo showed up right there. At this energy point. Right? Where are they trying to go is the question. If you take these targets, a reflection point, they're going somewhere here. I can't show you these reflection points in public. But people who are in the coaching program, they already know that. So there are targets inside targets inside targets, multi-time frame. You look to the right side of a given time frame. So from 15 minutes, entries with the same patterns are done on 5 minutes. Targets are on the higher time frame. I hope this is clear, right? If my decision factor is this, my targets are on the higher time frame, my re-entries or missing the entries, videos have been made on this, are on the lower time frame. Simple as that. Nothing much can be said about it. It's a thinking man's game. You have to think. Okay, so that day is over. You made your 10 points, you get out. Goodbye. Doesn't matter if it goes to 1,000 points or not. Then rest is runners, trade management, all the things you can get it from anywhere on the internet. Second day, now this is one of the use we can do with the trend line retest. When the trend changes, comes to pull back, and the sloping is going on. There we go. Contracts are not to the zero level, but it is close to that, and then this sitting at the bottom. If the pressures are so high, it doesn't mean if it gets in the zone, it will just reverse right away. It may take hours. The buying pressure has to end first, right? It ended. That's why I put this band. So if you get out of the band, wait for it to at least come inside the band, and then you see what is going on, right? But there's no need for you to take the anti-trend, not initially. All right. Second day, same pattern. 15-minute on the bottom, before the open. They're trying to just collect the contracts. Let's see on this algos. Okay, there we go. These are the trades we are taking. Again, more you trade, more you lose. If you lose the first, it's not about more you trade, more you lose has some logic. But main thing is every time you trade and open a new trade, the Markov probabilities come into picture, where it says that whatever you do, probability of the next outcome is 50-50, irrespective of any kind of analysis you do. So every time you put on, if you're in the trade, get out too early, then you try to get in again, the confusion, chaos, right? Every time you add a new trade, the probabilities are gone down to 50%. Here you're already a winner. You're at a break even, right? Let it jump. So how do you do break even? First of all, same logic. See, that's exactly same thing. From this high, recent high, in the box, trend line is drawn. Trend wants to go up. We don't directly jump in. We make a trend line. We make a, let us pull me in. Pull me in. It could have gone down 2-3 steps, 20-50 points in a heartbeat. Pull me in. Ready to go long, just pull me in. Because in the morning, right, at that time, the energy is fresh. This is overlapping time where one market is closing, other is opening. It will create a chaos, it create a movement. Direction is already set up, retest close to the moving line, there we go. So, same exact pattern. You don't even know which pattern this is from which day. Same pattern, same patterns. So, what do we do? Algos are showing up. Because we are eyeing, this is our top. We know that way in advance. We are eyeing for it to just go there. Now, where you are at the critical level is this one level on the top and one level at the bottom. There are levels on each side. That's why you see whenever we print something, we say this can happen, this can happen. Because if the buyers overpower somebody, they'll go here. When the sellers overpower, they will go there. And then you make a decision based on that, right? So given that they're going up, they will not stop until they hit that target. But they're just retesting those value balance imbalance points. And this is where we know this in advance, and then this is where your trade algos will show up. This is where your big dark pools will show up. This is how they're doing business. We know where they're doing business before they do business. They know it, we know it, you guys know it a little later. All right, there we go. Let's go to third day. 2 days. Third day. Third day, 1 day, second day, third day, came back close to moving averages again. We're also coming close to our target area. Okay, that's fine. We know about it, right? We know about it, all this. Okay, so let's see what's going on this energy. Same thing here. 1, 2, 3, 4, 36 points. This is a splendid week. Okay. So we're cautious that the range from A to B, much has been traveled, less is left behind to travel. We know that, right? Because we know this. Where are we going from A to B? We know this A, we know the B. We know these A's and B's, as I mentioned. This is your A, this is your B. We know this by frequency, we know this by so many methods. We know it. And level 1 clearly explains 8-point checklist, how we trace it. All right, so there we go. Again, same logic. I'm not let it go down, it's fine. I'm not chasing it. Same thing. Contracts came down, imbalance got imbalance. This guy is saying go long. We don't go long right away. We wait for this to settle up. Here's my buy stop. Prove it. This is where the pivots are here. Pivot is there, pivot is there, pivot is there, pivot break. We don't care about any of that. We just have our precise entry, precise stop, and 2 to 1, 2 to 1, 2 to 1, right? That's all there is. If you lose, now they could have gamed you that something happened. They just took you like this, didn't get your first target, and it was smashed on you, right? But you will know. Now this is, look at this on the hourly, right? It went way too strong. It came down into the Bollinger Band of the contract. Came to the bottom. Same thing, went out of the Bollinger Band. Now if you start treating these as rules, if this happens, I will do this. This happens, I will do this. No. Context. You're moving from here to here, and they'll game everybody in the middle to get there. And we know that. That, hey, you are going from here and here. I know that. Early part of the trade is a risk. In the middle is easy. Middle is easy. And at the edges, don't enforce a breakout. Unless they want to break out, they can do anything they want. There's so many time players. So our anticipation is, that's why we don't enter blindly. We have an entry methodology. All right, so we are just going to go with this. Same logic. Because there's no idea in quant finance, there's nothing called too much of a high price or too much of a low price. It can go lower, lower can go, low can go even lower, lower. And higher can keep on going higher, higher. These are all the ideas of man-made ideas, right? Mathematically, there's no such thing in quantitative engineering. So there's no such thing as too high or too low. Market moves in the square root of time, and it jumps in square root of time, and better to do business as critical areas. Because if you start doing business at the critical areas, the probabilities will start shifting on you, because they are looking at these big levels. Somebody's looking at it big levels. Big players are looking at the big levels. They don't care. They know once it gets there, he will make a decision. Does he want to hedge it, or he want to join the momentum, or he's going to defend it and push it down at critical levels? Again, same thing. Enter on the blue line. This is curved blue line. That's fine. They're almost same, right? So here the idea is already made, and we are waiting for market to open to pull us in. Pulls us in. We should be done. Same thing here. Algo showed up, right? The same pattern. This is ready to go up. Algos need to show up on the bottom side. Yeah, they do. We wait for this to break. We can also put a trend line, right? There we go. Trend line from the edge to the edge of the box. And there we go. Let it close above the line. So these are all simple things. And we go do it. Why did we take a shot at this point? Must we know this is the end point of this. And this algo showed up right on the top. Took an early shot. Came back to retest it. Shot it again. And there we go. But why this shot started initiating from here was, we know this level is there. That's why. You know these levels are there. Right? This is the first predictive models. And then that's all there is to be said about it. It takes a mind to understand. Okay, today we came for business. Now trend has shifted here officially by closing all below this line. Now again, these lines at the edges will create problems for you. That's why we have methodology. It tells you where the targets are. Okay, so you were being a good student and you just took one and got out, good to go. Now you know the targets are there. So there was not enough profit left in this. You will not wait for it to go your predefined targets of I will make 50 points a day. There's no such thing. You have to be dynamic in the market because markets are dynamic. This day is very much loud and clear. The short is there. Same thing. Let it come back close to the moving averages as possible. They're holding. Apex is forming, right? Okay, but we're coming off reflected off the level. We're coming and getting reflected off this level. All right. So what happens next? Right here. This day shows up. You're back in the business. You have emotionally been trained. This is a huge move. Tesla earning, that earning, move. Everybody was Tesla. We were, I think, I'm not sure. I think I didn't think I made a public video on that, but we were long for a while, bunch of weeks in the option market. We were selling. When we all sell against the market, we have to. There's no other option because the positions are so large. Nothing against anybody, right? So that's how it is. But you guys know these levels. You guys know what to do at these levels. You have blue lines, you have frequency lines. Use the frequency lines on every stock, and you know how to do it. At least for ES, I gave you 1 year also. Get those levels. Frequency, DNAs, everything comes together. So some things are in the internet, some things are not. And if you are serious about serious business, you have to think, reshape your mind, right? Everybody starts in a very difficult situation in this market because they are gaming. They're treating this as a profession of being an engineer, a lawyer, and doctors. These three people lose the most in the market, but they are trained to think in a disciplined manner. This is the most. Think like a chess player. You will win more. Do business at the right levels. You will win more. There's no guarantee that any trade you make is going to be a winner or a loser. Banks fight with each other. One will lose, one with more money, another one will go home crying as well, right? That's how it is. But there's so much, they're playing with your money, not theirs. So they can afford those games. 5,000 lots, 6,000, 8,000 lots. One is buying, within a second, other guy is selling. They will go to war. If you have been in the pit, games were amazing. Open outcry is gone. This is your open outcry. So again, always draw trend lines. Who is stopping us? No one. Draw the apex. If you're getting confused, losing context, there we go. So this system is adapting itself based on volatility and adjusting the price levels every day. The logic is still the same. But trend has shifted down. I have no interest in taking shorts. I already started shorting early with the view that this is a high probability. They could have gone to the next level higher up, but I have to take my shorts because they have to see how the reaction is going to be, right? So, but I'm looking at the contracts on hourly. Excuse me, sorry, apologize. And here it is. The moment you let go of your guards, they bank on that. Retest. Retest worked out. Came down, retest worked out. Why it is working out now very nicely? Why? Because they are reflecting from a major level. From the 4 hour. Okay, 4 hour is the major hedging phenomena for options, and they will impact the stocks, and indirectly they will impact your futures. That's all there is. Hourly binds your intraday chart to the big player, right? So hourly, they keep an eye on the hourly because they also trade 8-10 trades a day, right? So the big positions are on. You think about Goldman Sachs, look at their books. In one quarter, losing 2-3 days. That also there's want to do it because most likely they don't want people to go anti. I'm talking about the trading desk, right? So that's the level of perfection you need to be at, and it takes years, not one day seminar, because you're fighting your mind. This algo showed up on the top precisely, and the small box showed up precisely, took a shot. Very quickly it came down, and they jammed it again against you. Retest, right? Because we know what they are doing. We didn't short it again. Short it twice, right? Anyway, so this is the game you got to learn. If you take this, there's a reflection point there. All right, on every time frame. So now we are in this day, we come for business, we want our bread to be cooked by the market, and this is where we are. So our bias is already made up to be on the short side, right? You have to take some bias, reflection, methodologies are there, everything is there. Now, beyond that, you have to go look inside the bar itself. You have to master profiling methodologies. Each of them will take 6 months each. If you want to really become a 7-figure trader, and not by randomization, mind control. All right, so there we go. So short below this, 1, 2, 3. There we go. Bias was there, that's why. And then we have it here, right? So, and then same thing. Now you're taking early 8 o'clock, 9 o'clock, algos are showing up, let it break below this. That's why you put a line break below this. We don't chase anything. Here, break below this. Get me in. Now if you got in here, they may have gone against you, that's fine. Stop loss is right there. You can stop out. Try. If you get lost in your confusion and take a stop loss, try again. If you win the first trade, you're out. This is where 18 days winning will come from. Thank you so much.